Let's take a deep dive into one of the biggest and most recognized names in fast food, Domino's Pizza, ticker symbol DPZ. Now, Domino's has come a long way since its founding. Today, it's one of the largest pizza chains on the planet, with over 20,000 locations in more than 90 countries. And this isn't just about pepperoni and cheese. This is a company that's been innovating and leading the pizza industry for decades. You might remember their 30-minute delivery guarantee, a groundbreaking promise back in the day that set Domino's apart. Fast forward to now, and they're still leading the way with AI-driven ordering, real-time delivery tracking, and a robust digital platform that continues to evolve. Domino's is not just a pizza company, it's a technology-enabled, logistics-focused global brand. With a market cap of just over $15 billion and a 10-year compound annual growth rate of 17.7%, Domino's has been a strong performer over the past decade. But to really understand this business, we need to go deeper. So let's break it down. Starting with revenue, Domino's has delivered impressive long-term growth. Over the past 10 years, revenue per share has grown at a 14.2% annual rate. That's strong, especially when you consider that during the first 4 years of that stretch, revenue per share more than doubled, going from $41.20 to $82. In 2019, revenue growth slowed to 8%, but 2020 saw another big jump of nearly 20%. Since then, growth has moderated. We've seen increases of 10.9%, 8.4%, 0.5%, and 6.2% in the past 4 fiscal years, respectively. That 0.5% number in 2023 did raise some eyebrows, but it bounced back the following year. So while there is some variability, the trend overall remains solid. Now it's important to highlight Domino's share repurchase program. During the first half of the past decade, the company reduced its total shares outstanding by about 6% annually. And in the last 5 years, buybacks have averaged about 2.5% per year. That kind of consistent repurchasing enhances shareholder returns, especially when paired with rising earnings. Moving on to the gross profit margin, Domino's has shown resilience here as well. For the earlier years on the chart, margins hovered comfortably above 30%, which is solid in this industry. In more recent years, margins have settled closer to 27%, dipping to 25.6% in 2022, likely impacted by inflation, rising ingredient and labor costs. But encouragingly, margins have climbed back to just over 28% in the past 2 fiscal years. One metric that really makes Domino's stand out is its return on invested capital, or ROIC. This is a great indicator of how efficiently a company is using its capital to generate profits, and Domino's absolutely shines here. At the beginning of the chart, ROIC was already an impressive 61%, and it peaked at over 80% in fiscal year 2018. While it has come down since then, it's still clocked in at 42.5% last year, which is exceptional. For context, a 20% ROIC is considered very good, so Domino's more than doubles that benchmark. That tells us this is a business with a highly efficient model and strong pricing power. Next, let's talk dividends, because this is an area where Domino's has quietly become a strong performer. Domino's has now increased its dividend for more than 10 consecutive years. And just recently, in February of 2025, they boosted their quarterly payout by 15%, from $1.51 to $1.74. That brings the annual dividend to $6.96 and gives the stock a current yield of just over 1.5%, well above its 4-year average of 1.12%. What's even more impressive is the growth rate of those dividends. Over the past 3 years, the dividend has grown at 16.95% annually. The 5-year average is even better, 18.09%. And looking over the full decade, we're talking about a 19.2% compound annual dividend growth rate. The payout ratio, by the way, is not a concern here. Domino's has kept it below 35% consistently over the past 10 years, giving them plenty of room to keep increasing the dividend, even if earnings growth slows down a bit. Now, despite the strong fundamentals, Domino's does face some real challenges. First off, competition in the pizza and delivery space is fierce. Domino's is up against global brands like Pizza Hut and Papa John's, as well as local chains and mom-and-pop shops in every city. Add to that the rise of third-party delivery platforms like Uber Eats and DoorDash, and it's clear the landscape is more competitive than ever. Another concern is shifting consumer preferences. Let's face it, as delicious as pizza is, it's not exactly a health food. More consumers are opting for low-carb, plant-based, or health-conscious meals. if Domino's doesn't continue to evolve its menu to meet those needs. And while they've added vegan options in some regions, it could lose relevance with younger or more health-focused demographics. Still, the company's track record of technological innovation, strong franchisee support, and ability to adapt gives it a solid foundation to stay competitive. Let's briefly touch on Domino's most recent earnings report from Q4 2024. The company posted GAAP earnings per share of $4.89, which was just 1 cent short of analyst expectations. Revenue came in at $1.44 billion, which missed estimates by $30 million, but still marked a 3% increase year over year. US sales were up 2.3%, while international sales grew at 6.4%. Overall, the company reported a 4.4% increase in global sales when adjusting for foreign currency impact. And here's something I didn't realize until now. Domino's actually generates more revenue internationally than in the US. It's close, but still surprising. When it comes to same-store sales, US franchise locations rose 0.5%, while company-owned stores dipped 0.7%. International same-store sales were more robust, growing 2.7% in the quarter and 1.6% for the full year. Full-year earnings per share came in at $16.69, up nearly 14% year over year from $14.66. That's strong earnings growth, especially for a mature restaurant chain. During the quarter, Domino's repurchased over 250,000 shares for more than $110 million, and for the full year, bought back over 750,000 shares, spending just over $325 million. As of the last report, the company still had more than $814 million remaining on its buyback program. Not surprisingly, the market responded well. The stock rose more than 3% on earnings day. So, what about the bottom line? According to my free cash flow valuation model, Domino's Pizza is currently trading for a slight premium to fair value. My model suggests a fair price for the stock of $440, and it currently trades for about $468. During the last 7 years, the free cash flow model is showing that Domino's oscillated through more and less opportune valuations, with today not being a bad time to add this stock to your watch list. The long-term expected rate of return sits just below 10%, broken down like this: a forward dividend yield around 1.49%, a negative return to fair value of minus 1.36%, and projected earnings growth of 8.83%. So while the 8.95% return estimate might not meet my strict 10% hurdle rate, it gets very close, especially when you consider the high-quality nature of the business, the resilient margins, and the strong dividend growth track record. To wrap things up, Domino's Pizza has all of the makings of a long-term winner. It has a powerful brand, consistent revenue growth, excellent returns on capital, shareholder-friendly capital allocation, and a clear focus on innovation and tech. While it does face real challenges from competitors and shifting consumer tastes, it's shown time and time again that it can adapt and thrive. With a reasonable valuation and solid fundamentals, Domino's Pizza looks like a dividend growth stock worth serious consideration. Thank you for tuning in to this deep dive on Domino's Pizza. If you're looking for quality at a fair price, Domino's might just deserve a spot in your portfolio, or at the very least, on your watch list. If you'd like to take a closer look at any of the charts I showed you today, you can check out my full write-up on Domino's Pizza in my newsletter, Quality at a Fair Price. There's a link in the description below. If you enjoyed the video, please leave a like and subscribe to the channel. Thank you and see you next time.